Hey everybody, Brian Shannon here from AlphaTrends.net. It is Friday, the 12th of August, 2016, and we finished with new highs once again in the market on a weekly basis. The S&P 500 gained a small percentage. The Nasdaq 100 gained about a third of a percent. Russell 2000 down a little bit. Those semiconductors just keep flying higher, up almost a percent this week. Biotech's pulled back. Oil had a good week, and bonds are up as well. So let's take a look at the action on the charts. We're still in an uptrend, and the people who continue to put comments in about why we're topping out or that are clearly wrong. We are in an uptrend. It is innocent till proven guilty. There's nothing bearish about these charts. When we look at the S&P 500 this week, we saw a slight pullback middle of the week. It did come down to this prior level of resistance and found support there. We still had a rising 5-day moving average, which tells us that those are typically just pullbacks. They give us basically a yellow light at that point, but obviously the next day when it gapped higher, the buyers regained control and kept that control as we closed above the week-to-date volume-weighted average price and right at new highs on the weekly basis as well. So slight pullback today, but still a positive week for stocks. I think next week we're going to want to see about that 217 and a quarter continue to be our near-term level of significance that we want to see hold as support. If it can do that, then there's no reason to be bearish on this on stocks. The Nasdaq continues to move higher as well. This has just been an incredible uptrend. We've seen a couple of dips below or to the 5-day moving average, but the buyers have quickly regained control. And this week we have important support found right now at about 116 and a quarter. If we break below that level next week, then perhaps we're due for a little bit deeper correction. But there is zero evidence that the sellers are gaining any control in here. The 5-day volume weighted average price is right there with the 5-day moving average, and again 116 and a quarter-ish I think is going to be the level that we want to keep an eye on for. If it breaks below that, then maybe we get a little bit deeper correction. But for the people who continue to spout off about why this market needs to go down because of volume or whatever oscillator or indicator they're looking at, they're forgetting the most important thing, which is price. Price is the only thing that pays, and it's the only thing that really matters at the end of the day is the price action. That's why we trade stocks, because the prices move, not because there's big volume or low volume and we can just exchange shares at will, but we're in the market to make money, and price is how we keep score, not by volume. So again, we're in an uptrend. If you're bearish, hopefully you're just sitting on the sidelines rather than trying to fight this market, because you've got to have incredible money management if you're trying to sell short this market. The Russell 2000, same thing here. We got below that 5-day moving average. The 5-day moving average was advancing, and we came into a prior level of resistance here. So going forward, this is going to be an important low for that we see at 121 and a quarter. If we continue to hold above that, that's where I think we continue to give the benefit of the doubt to the buyers in the intermediate term. And the semiconductors, again, this group pushed past some resistance in here, and then it never went bearish over here. It was below the 5-day moving average, but it never made a lower high and a lower low below that 5-day moving average. So we got cautious in here late last week and back to bullish. This is the level that it retook that level. The buyers are back in control, and 64 is going to be an important level going forward here for the next week or so. The biotechs pulled back a little bit down to this prior level of resistance, and it's been due for a breather, and so far it's looking like just a good controlled pullback. We did close below that 5-day moving average, and we have for the last few days, and it's starting to maybe even itself back out. I think that if it can get back above this level, then this will prove to be a pullback, and that the buyers should regain control. If it kind of does something like this, I think would be the best case scenario as far as tradability goes. That we see a pullback, see it rally up towards this level, and then pull back, create a higher low above that 5-day moving average, which would then be rising, and then to continue higher from this level here. And that's what I would be looking for if you're looking to trade the biotechs long, unless you just buy into a prior level of resistance. But buying into this level is taking a lot of risk. It's no different than taking a lot of risk by trying to short into it, as people did back here, and those people got squeezed out of the market. So Apple had a positive week here. It did close right at that 5-day moving average, and I think that for Apple, it's getting a little bit tired here. I think that if it gets back below probably about 107 and a quarter-ish, then it would be time to take some off if you're long in there. I've been talking the last couple of weeks about Alibaba and this volume weighted average price since the IPO, and this is why it's significant. It had been prior resistance in the past, and as we were talking about, the more times any type of resistance is tested, the more likely it is to be broken, and this stock broke out in a major way here this week, and that'll do it for me. The focus of Alpha Trends each and every day is to find low risk, high probability trades, and there's still some great setups out there.